Welcome back. We've been tracking cues across Asia, and most of them seem pretty okay, except the Chinese market, which, of course, has opened out after a long holiday. There's some red over there in China. Hong Kong's also slightly lower, but Hong Kong's off the lowest points of the morning, so it's not too bad. But for us, of course, that FPI buy number has led to a lot of optimism. The implied open is suggesting we'll start at least 50 points higher. Let's now talk about individual stocks, because there are lots of them to track. Lots of earnings have come in overnight as well, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Mangalam, let's start with Titan. Not very often that we talk about a potential miss here and there or margins coming under pressure for the company, but what's happened?
Well, for Titan, the results should be looked at as a piece of old jewelry. Yes, at first it appears dusty, then you wipe it clean and it's shining once again. And that's exactly how these numbers are. Reported numbers, yes, there is a miss on, revenue as well as margins, but you have to look at why. Margins missed on a 253 crore inventory loss on account of the customs duty cut that came by in the second quarter itself. There was a 48% rise in the sale of gold coins. Remember, this quarter also had Dhanteras, which was in another time in the previous year. And the studded ratio, we've been talking about weakness in diamonds. That's coming at 23% versus 24% as well. But the revenue growth was led by wedding season sales and higher gold prices. Reported numbers, revenue was a little over 16,050 crores. The street was working with a number of 16,700 crores. Here as well, remember, the company had sold no gold ingots, which is excess gold that they had in this year versus 120 crore last year. So you have to make that adjustment as well. EBITDA at 1,510 crores, margins at 9.4%. I told you about the one-off inventory, and the net profit as a result of which was shy of street expectations. Jewelry revenue grew 25.5%. And if you adjust for the one-off, the company said the margins are at 11.2%, right in line with their lowered guidance of 11 to 11.5%. So for starters, the stock may just open in the red, but from there on, we may see some recovery there.
All right, Mangalam, thanks a lot for that. In fact, we'll be connecting with the management of Titan at 9:40 a.m. later today. So we'll get some clarity with regard to the past quarter's numbers and how they see things panning out going ahead. That's about Titan, but Vivek's had a busy evening. He's looking at Tata and Torrent. Morning, Vivek. Tell us more.
Good morning. That's right. So Tata as well as Torrent and focus on the back of Q3 results. Tata, remember, multiple moving parts, multiple one-offs impacted the quarter as far as Q3 was concerned. What is heartening is the fact that, number one, the cell plant has ramped up quite significantly. It's now profitable. And also, one of the important headlines is the fact that the company has confirmed the interest as far as the UP Discom privatization is concerned. Looking at the numbers themselves, revenues higher by 5%, coming in close to the 15,391 crore mark. EBITDA higher by 38%, aided by multiple one-off contributions. Margins at 21.8 versus 16.5% on a year-on-year basis. Profitability higher by 10.4%. But remember, profitability was aided by a one-off regulatory income at Mundra of close to 330 crore. Key highlight, segmental, the solar EPC order book is very strong, 13,556 crore. The cell line revenues of over 1,300 crore. EBITDA at 226 crore and profitability of 112 crore. We told you about the interest at the UP Discom, and the company also gave an interesting update saying that they are seeing increased power demand, especially in the last 2 months, and they are expecting peak power demand as far as some upcoming summer season is concerned to be better or higher than what it was in the past. Now coming to Torrent, slightly subdued set of numbers over here. Revenues higher by 2%, EBITDA higher by 6.5%, margins are up 60 basis points on a year-on-year basis. Again, in the other income, there is a one-off component of 770 crore, which is gain. This on the back of the sale of the cables business. Profitability higher by 30.8%. What worked for the company this time around? Higher contribution from the gas-based power plants. What didn't work was the lower wind contribution on the back of lower PLF. So expect some red as far as Torrent Power is concerned.
All right. Vivek, thank you very much for that. So Torrent and Tata Power in focus on the back of numbers. Let's talk about insurance now. We had Max Financial, which reported numbers after market close. Niva Bupa is the other one. Yash is here with details. Yash, morning.
Well, Prashant, it wasn't a day for insurance as far as earnings are concerned. Max Financial, weak set of numbers coming in for the company. If you start from the top line, it was still a decent number which the company posted, but down the order, it got difficult to look at the numbers. As far as the new business premium is concerned, that was in line with CNBC-TV18 poll, up about 11% at 3,000 crore rupees. Total APE or total annualized premium equivalent, that grew by 20%. It was a miss though, as far as CNBC-TV18 poll is concerned. Retail AP was in line with CNBC-TV18 poll, growing at 16%. But as I said, The numbers became difficult to read once it came down the order. Value of new business, it missed CNBC-TV18 poll. On a year-on-year also, the number had no growth. It was absolutely flat. As far as margins are concerned, that saw a sharp correction. It was down 400 basis points for Max Financial Services at about 23.2% versus 27.4%. The main reasons for that were, of course, the product portfolio which tilted towards ULIP. Niva Bupa, again, weak set of numbers. I'm going with red on the stock. Net earned premium growing at 20%. Underwriting loss increased 42% at a loss of about 101 crore rupees. Operating profit, those were down 71%, and combined ratio shot up 774 basis points, coming in at about 108.29%.
God, that's massive. I wonder what happened. Well, that's exactly, Yash will ask exactly that. How did that combined ratio move from 100 to 108? This is exactly among the questions that we'll put to the management of Niva Bupa. We will have them join in at 9 a.m. Talk about, of course, the trends and the business outlook from here on. Krishnan Ramachandran will be with us in a bit. Thanks for that, Yash. Let's move on and talk technology. Happiest Minds came out with numbers. Rima, how are they?
So Happiest Minds has reported a weaker top-line growth compared to expectations. The company's constant currency growth of about 0.8% falls short of analyst estimates of 1.1%. On a year-on-year basis, growth has been strong for the company for the last 3 quarters on account of the 2 acquisitions, Aureus and PureSoft. Now, for the 9 months of FY25, the company's clocked in a revenue growth of near 25%, but it falls short of the company's own aspiration of a 30% kind of growth for FY25. EBITDA margins have fallen by 60 basis points, according to the company's calculation, at 21.1%, but it's within the company's guided band of 20 to 22%. But on the whole, it's a slightly subdued quarter, muted, and a bit of a miss on the top line.
Thanks a lot for that, Rima. In fact, we'll be connecting with the management of Happiest Minds at 9:50 a.m. later today. Let's get Vinny into the top 10 then. Vinny is here to tell us about JB Chemicals as well as Global Health. Morning, Vinny.
Good morning, Nigel. So in terms of numbers from both these companies, a decent set of numbers that have come in. JB Chemical Pharma, let's talk about that first. They managed to see a growth of around 14% on a year-on-year basis in terms of revenue. Profits seeing a growth of 21%. Margins have remained largely flattish. Now, domestic formulation, that has seen a 23% growth. International formulation business, a bit of a decline this time of 4%, mainly because of the impact of the Forex that is impacting the overall performance in the international market. CMO sales, 33% growth. API sales seeing a bit of a decline, but API is a very small portion of the company, just 3% of the sales, so not much of an impact on that front. Revenue in line, margin was something better than what the street was expecting, so that is why we're expecting a green coming in for JB Chemical and Pharma. Expectations were muted, and they've managed to, just do slight bit better in terms of margin performance, so keep an eye out on JB Chemical Pharma. Medanta, we're expecting green here as well. A good set of numbers that has come in from the company, 13% growth in terms of revenues, profits seeing a 15% growth, and margins are seeing almost a flattish move coming in, just a 40 basis point decline. What's interesting is the occupancy comes and manages to stay above that 63% level, so keep an eye out on that. Mature hospitals have done well, but with that, even the newer hospitals and newer developing hospitals in Lucknow and Patna are managing to see a good growth, and margins over there are also quite decent, so that's an interesting one over there that we're keeping an eye out on. In terms of expansion of beds, also Ranchi is expected to come and commence operation in Q1 FY26, and similarly for Noida, also Q1 to Q2 FY26 is when they can begin operations there. So positive commentary also coming in.
All right, Vinny, thank you very much for that. So hospital in focus there with Medanta. Lemon Tree, the hotel company, reported earnings. Mangalam is here to recap the numbers. Mangalam.
All guns blazing for Lemon Tree Hotels. It's a seasonally strong quarter for the hospitality industry. We're in a structural upcycle for them as well. And for Lemon Tree, the additional kicker comes in from increased occupancy of the hotels that they opened just last year itself, and one of them was Aurika Mumbai itself. So it's a record-breaking quarter. Revenue up 22%, EBITDA up 30%, margins improved from 48% to close to 52%, net profit growing by 75% plus itself. Occupancy was the key positive here, increased by over 800 basis points. And we had the Aurika occupancy, which was up from 42% to 71%. And remember, this is the business which gives them higher margins and higher room rates as well, which overall were higher by about 7%. So good going for Lemon Tree. See some green continue for the hospitality sector and Lemon Tree in particular.
Okay, absolutely. It's been a good quarter for them. Mangalam got that. Thanks very much for joining in. We have now Sudarshan joining in. JK Tyre also reported numbers yesterday. On track or skidding? Which one is it, Sudarshan?
So like other tire companies, JK Tyre also has announced earnings which was very weak, but stock is near 52-week low. It's down nearly 19% in just last 2 months. And the reason is material costs continue to rise. In Q3, it saw a rise of nearly 6%. That likely to have impacted margin. So revenue was flat at around rupees 3,700 crore. Margin has come in almost 700 basis points down at 8.6% versus 15%. And as like material cost increased by 6%. Coming to segments, India business, which forms nearly 90% of total revenue, for which EBITDA was down 54%, and Mexico business too has seen EBITDA falling by 17%. But company says replacement demand remains strong and expects improvement in the earnings in Q4. But I'm going with red because of the Q3 earnings.
Okay, all right. Thanks a lot for that, Sudarshan. Well, those are all the top stocks we're looking at, but let's shift focus then from all the top stocks to the commodity market. Manisha joins us to help us out with exactly that. Manisha, morning, take it away.
Thank you for that, Nigel. Well, you've woken up to a market where all the commodities are trading in the positive. If you look at the gold prices, we are at an all-time high. 28.47 is an all-time high in gold prices until now. After 28% of gains last year, we are up by nearly 8.5% this year already. Silver is trading at around 2-month highs as well, above $32 an ounce. The US-China trade war, with the retaliation that China has done in sense of tax, that has led to safe haven buying coming for gold and silver. Crypto, for that matter, is trading at about $100,000 there. You also have seen Japanese yen gain up. So clearly there is this safe haven buying coming in. But for the other commodities, crude oil prices also have rebounded with the kind of tariffs that China has put out. And China, by the way, imports 70% of its requirement. So this is going to hurt China as well. And we have seen crude oil prices react to that. Metals also are trading in the positive. We haven't seen very strong data coming from China, and the reiteration from China that you could be looking at more stimulus measures seems to be supporting metals also. So you have copper prices now trading at a 2-week highs in the Asian markets.
All right. Thank you very much, Manisha, for that. So that's commodities in focus, and commodities are trading higher and stronger. Well, we're back with Gurmeet Chadha of Complete Circle for some fundamental stock talk. We'll also have the fairly recently listed Seagull India management joining in on the third quarter numbers that they've come up with. Stay tuned.